This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Let's go through the weekend's auction results. And nationally, there were 1,387 auctions. 2/3 of those cleared, as you can see there. Now, in Sydney, there were 500 auctions. The clearance rate there was just under 69%. In Melbourne, the market did even better, 537 auctions. And have a look at that, a clearance rate above 72%. In Brisbane, 64 auctions and a clearance rate there around about 58% or so. In Adelaide, just 37 auctions, but the clearance rate was a tick under 65%. And in Canberra, 39 auctions, a clearance rate of 61.5%. Angus Moore is an economist with REA Group and joins me now. Angus, thanks for your time as always. I'm not sure about those people who bought at auction, but they clearly either didn't have to worry about or didn't hear that the market thinks it's odds on that the Reserve Bank will raise interest rates at its next meeting.
Yeah, we've certainly seen a bit of a pickup in expectations for rate increases. I think for my part, I'd be pretty confident we'll get one, probably another two at least, just given where inflation is. And the fact that the labour market remains extremely strong. We saw unemployment is remaining around those 5-decade lows. So there's kind of no signs that the RBA is going to need to slow down increasing interest rates anytime soon.
In some ways, this almost highlights, doesn't it, a disparity in Australia's society at the moment. There is a group of people who are going to struggle as a result of rising rents, rising mortgages, cost of living, all those basic things. On the other side, there's still a lot of people who clearly are out there in the property markets right now who have got the savings capacity, are willing to back themselves to buy property now in the expectation of increases in the future and can see themselves through to a period where the Reserve Bank even starts to cut interest rates.
Yeah, we're certainly still seeing pretty strong buyer demand. So there are clearly some of those people still out there. And one of the interesting things we are starting to see come through in mortgage data is there is an increasing number of mortgages being taken out with quite low LVRs. So, quite large deposits, a lot of equity behind it. So the share of mortgages being taken out with sub-60 LVRs has picked up quite a lot over the last year and two.
And so are they investors or first-home buyers doing that?
We don't know from the data, unfortunately. So it comes through from the banking regulator, APRA, and they obviously have particular interests in mortgage data and in the types of loans that banks are making. They unfortunately don't make that split between first-home buyers, investors, owner-occupiers by LVR available. We know, one of the things we know is that first-home buyers are very rarely and probably almost never going to be borrowing at that sub-60 LVR. Right. They are typically, most don't even have a 20% deposit. Mm-hmm. And one of the things we saw during the pandemic was an increase in high LVR lending, as we saw a lot of first-home buyers. Of course, first-home buyers have really pulled back as interest rates have picked up, and so we've seen that high LVR lending come off over recent.
Okay, so is there any evidence yet as to where the regions are, where the mortgage stress is? And let's be honest, unemployment rates last month fell. So while that happens, you're not going to get these pockets of mortgage stress. But do we have any evidence as to where the bigger mortgages are, where the potential stress might land in the future?
Yeah, it's a great question. We have some data on it, but to date, we actually haven't seen a lot of evidence of mortgage arrears. Again, APRA published data on the banking regulator, published data on loans past due and on arrears. And while they did pick up a little in the recent data, I would kind of stress a little, they remain very low and even lower than they were pre-pandemic. Now, arrears rates tend to lag conditions. Obviously, for a mortgage to get into arrears, you have to have missed payments a few times, and obviously people are going to go to a lot of effort to not get behind on their mortgage. So stress is going to happen before arrears. But at least to date, we're not yet seeing that in the data. And a big part of the reason, as you say, is just unemployment rates remain very, very low.
And so while that's the case, you're not going to get those arrears. So as a result, even people thinking about a bargain, waiting to see whether there are people who do have those stresses, who really prey upon those to get a bargain or to get negotiability in their things, that's not going to happen.
Right. We know one of the biggest predictors of mortgage default is job loss. Most people are able to kind of juggle their budget and, make expenses meet with their mortgage. What they can't kind of work around and juggle is if they lose their job and lose their income. And that, what the research shows is that's one of the key things that drives mortgage arrears. With unemployment rates near 5-decade lows, to date at least, that hasn't really been a concern. At least not yet.
It's going to be interesting because also obviously there's a lack of building and more migration, all of those adding to potentially higher prices into the future, not less. Angus Moore, many thanks for your time today. Always appreciate it.